What if AI's biggest threat isn't technology, but people? It's a provocative question, but let's dig into the reality behind it. We often hear about the potential of artificial intelligence to transform industries, create efficiencies, and drive unprecedented economic growth. However, as we marvel at these possibilities, we overlook a critical factor: human error and intent. Consider this. A report from Accenture estimated that AI, if implemented well, could boost labor productivity by up to 40% by 2035. That's a staggering figure, pointing to a future where huge economic gains are possible. But this rosy picture comes with troubling undercurrents. It's not the machines that pose the greatest risk. It's what humans choose to do with these advancements. Take the issue of bias. A study by MIT in 2018 revealed that commercial AI systems from leading tech companies showed an error rate of just 0.8% for identifying the gender of lighter-skinned males. However, for darker-skinned females, this error rate soared to a shocking 34.7%. This variance isn't just a technical glitch. It's rooted in biased data and development practices shaped by human oversight. When human biases seep into AI systems, the consequences can be far-reaching, reinforcing and amplifying societal inequalities on a massive scale. Another pressing concern is data privacy. The global data privacy tools market is projected to reach $15 billion by 2025, according to Statista. This figure underscores a booming demand as companies rush to mitigate privacy risks associated with AI systems. Yet it's clear that financial investments alone cannot fully address these challenges. The Cambridge Analytica scandal serves as a stark reminder. This firm harvested data from 50 million Facebook profiles without consent, manipulating it to influence political outcomes. The problem wasn't AI itself, but rather the misuse of AI-driven data analytics, fueled by human motivations. Now, let's talk economic disparity. According to a study by McKinsey, AI has the potential to add $13 trillion to global GDP by 2030. While this might seem like a positive development, it raises critical questions about equitable distribution. If AI helps the rich get richer while leaving the marginalized behind, societal fractures could deepen. The wealth gap could widen, with automation potentially displacing 400 to 800 million jobs by 2030. This doesn't have to be a zero-sum game, but again, the human element, governance, regulation, and strategy will play a crucial role in shaping outcomes. The autonomous weapons race presents perhaps the darkest scenario. Estimates suggest that the military AI market could be valued at over $18 billion by 2025. The idea of AI-driven warfare isn't just a sci-fi nightmare. It's becoming a tangible reality. With great power comes great responsibility. Yet, a report from SIPRI highlights that the lack of international agreements regulating the deployment of AI in military applications leaves a dangerous vacuum. The common advice to just regulate AI oversimplifies these complex realities. Currently, less than 20% of countries have comprehensive AI strategies. This data from Oxford Insights highlights the slow pace of governance, lagging behind rapid technological advances. We can't rely on regulation without addressing underlying human factors, motivation, oversight, and ethical standards. So, what does a pragmatic solution look like? How can we effectively align AI's growth with societal progress without falling into these pitfalls? Stay tuned as we delve into strategic approaches that emphasize ethical stewardship, robust frameworks, and beyond, aiming to address the profound AI ethical concerns we're facing today. What if AI's biggest threat isn't technology, but people? Picture this. By 2030, the AI industry is projected to be worth $15.7 trillion, according to PwC. That's a massive incentive. But with this potential comes responsibility. We must address AI ethical concerns seriously. For instance, in 2021, over 43% of surveyed AI professionals reported witnessing bias or discrimination in AI systems. Numbers matter when lives and money are on the line. AI can make critical errors. Here's a recent example. An AI program misdiagnosed medical scans, which nearly led to incorrect treatments. Harvard found machines misdiagnose images with a staggering error rate of up to 3%. In healthcare, an industry worth about $8.45 trillion globally, that means mistakes costing billions in potential misdiagnoses. The implication? Realigning these systems for accuracy isn't just moral, it's financial. In public safety, things can be just as concerning. A 2020 study revealed a 20% chance of error in facial recognition software when identifying minorities. In a legal system that processed around 10.3 million arrests in the U.S. alone that year, that's potentially 2 million misidentifications. Misidentifications that could ruin lives, inflating already staggering costs associated with legal coalitions and wrongful convictions. Imagine millions wasted on correcting AI-driven errors. But how can these algorithms be so flawed? It boils down to biased data. In finance, a sector worth $22 trillion globally, an AI-driven credit assessment misjudged applicants due to relying on incorrect data patterns. This led to discrimination lawsuits, averaging settlements of $12 million per case. For businesses, preventing such loss means prioritizing accurate AI systems, an ethical and economic imperative. Let's conduct a brief illuminating exercise. If deploying safe AI systems could slash these inaccuracies by even 10%, industries worldwide could collectively save trillions. From this perspective, the ethical call to improve AI isn't merely humane, it's economically prudent. Here's where it gets unsettling. The rush for profit sometimes bypasses ethical guidelines. An MIT study discovered only 15% of AI projects consider ethical implications pre-launch. That's a glaring oversight, one that could backfire financially, fueling scandals and consumer distrust. Companies risk not just fines, but public backlash, a destructive force that can devastate stock prices almost overnight. Pattern Interrupt 1. Take a back step and think of AI in cybercrime prevention. In 2021, global cybercrime damages hit an eye-watering $6 trillion, more than the GDP of the UK. AI offers defensive promise here. Yet, if algorithms incorrectly flag innocent activities due to flawed programming, false accusations could soar. Such errors aren't merely technical, they're costly. Addressing accurate identification saves millions in legal fees and human capital. Pattern Interrupt 2. Consider algorithmic trading, where AI decisions move markets in fractions of seconds. Algorithms predicting stock moves based on erroneous data risk, triggering financial chaos. Sudden falls can wipe out millions in investments. On the flip side, correcting these with vetted, ethical AI could secure investor trust, bolstering financial stability in global markets. So, while AI bears significant promise, ignoring AI ethical concerns trades short-term gains for long-term woes. Addressing these issues before rollout, using clear ethical frameworks and validated data sets, helps secure both humanity and economy. This dialogue isn't just about machines learning right from wrong. It's about us, makers, users, committing to equitably beneficial AI. In our next section, we'll explore practical strategies you can take to ensure these ethical measures are in place efficiently and effectively. So, what can you do right now to navigate these stormy waters of AI ethical concerns? Let's break it down with a practical action plan that you can implement starting today. Begin by educating yourself and your team about the potential ethical challenges of AI. You don't need to enroll in an expensive program. Commit to spending just 20 minutes a day reading articles, watching expert interviews, or following thought leaders in AI ethics. This is free but invaluable. If you do this every day for 30 days, that's 10 hours of targeted learning, opening your eyes to unseen risks. Next, audit your current AI systems. Do they infringe on privacy? Are they transparent? Draft these into a checklist. For instance, assess how data is collected and used in your business. Manual checks might take 15 minutes per data source, so set aside a few hours this week. Once done, you've added a level of scrutiny that could save you from future regulatory headaches. Some companies have faced millions in fines due to negligent data practices. Don't be one of them. The third phase is to implement AI in a way that incorporates ethical considerations from the outset. Create an ethics consult for any new AI project, not as an afterthought. This doesn't have to be complex. It could simply be a 30-minute meeting before kickoff to discuss potential biases and how you intend to counteract them. Set targets. Reduce bias-related incidents by at least 10% in pilot phases. Finally, engage with AI governance bodies. Join forums or groups dedicated to ethical AI. These communities can guide you and hold you accountable. Measure your progress by tracking involvement. Attend at least 2 webinars or forums in the next month. But what if your budget is tight and you're skeptical about the ROI of these measures? Consider this. The cost of an ethical oversight is vastly lower than reputational or legal consequences. Remember, a single PR crisis caused by AI misjudgment might cost you dearly, not just in dollars, but in trust currency. To loop back, consider the opening question. What if AI's biggest threat isn't technology, but people? With a solid plan, confident in your ethical grounding, you safeguard against human error and biases fueling technology's threat. If this breakdown spoke to you, subscribe. Let's keep exploring how to smartly navigate AI's evolving landscape while minimizing ethical risks.